like if something continuously pushes to the upside, it provides a certain stigma towards traders, right? Back in the days, I once read this other articles, not back in, I once read this article back in the days, but this article was basically just describing how traders behaved previously, right? Whereby you had more people without even understanding the stocks, how they move, how stocks move, and how to actually invest in stocks, right? So they will just come in and buy at any position, or just come in and start investing at any position, because they had this notion that stocks are always in a buy. That's why you hear most people, they say, NASDAQ. Yeah, NASDAQ is always a buy. US 30 is always a buy. Like they always have that notion that this thing is always a buy, because they are looking at it from its totality, but without understanding that each and every time frame, it carries a certain amount of risk with it, right? So everyone, when they get in, they always want to buy NASDAQ without understanding why they need to buy NASDAQ, right? Are we okay on that? Or US 30? It's always been the case. But there will always be a reduction in price before the continuation in that prevailing trend, right? Or right now we're talking based on the rally, right? Based on the rally, each and every time the market needs an extra push to the upside, or it needs to continue buying, it must sell first, right? The main objective of the market selling before it continues rallying is because it wants to generate the necessary liquidity to continue with that rally. It's the same as someone who wants to travel from Pretoria to Durban, right? If you want to travel from Pretoria to Durban, regardless of what type of a car do you have, okay, some cars, they don't consume that much fuel, but like if, let's say maybe you're driving a BMW, right? When you're driving at certain points within that journey of yours, or within that trip, you need to do what? You need to refill your fuel, because your car is consuming fuel, right? You need to always refill until you reach your destination. So similar situation will occur with the market. Before it can reach its intended target, there must always be a refill. A refill will come in the form of a reduction in price, resulting in traders being forced to liquidate their open positions between those movements, right? Between those swing highs, swing lows. Whenever the market wants to continue rallying, it must have refill points. Are we okay on that? I think I made one of the simplest examples I have ever made, right? So a reduction in price, its main objective is to generate the necessary liquidity required to continue with the rally. A reduction in price forces traders to shift perspective and start considering the opposite direction. And when they shift perspective, close their open buy positions, they automatically generate the necessary liquidity required for buyers to continue with the rally. Are we okay? So, therefore, we're saying that the market doesn't move in a straight line, right? So if the market doesn't move in a straight line, therefore it moves in waves. And if the market moves in waves, if it's in a rally, based on Dow theory, the swing low don't get broken, the swing highs get broken. But whenever the swing highs get broken, who is residing on those swing highs, guys? Who is residing here? Who is residing here? When the market comes back, breaks above, who is residing here? There is someone residing here with a short position, isn't it? The sellers. The sellers are there, vacationing. The sellers are at the Maldives when the price is dropping. They are cruising. In South African terms, they call it milking. They are milking. Are they not milking? Guys, are they not milking? They are doing what? They are milking. They are killing it. Screenshot, post on Instagram, show them that you can make money too. Right? So with that being said, when the milkers are milking, note that everything that is occurring at this area here puts traders at ease. Whenever the market comes back for a retracement, gives them opportunity to place short positions. Price pushes to the downside, comes back to that specific area, gives them opportunity to place short positions. So now there's that accumulation of orders here, right? When there is that accumulation of orders, you yourself ask yourself that if the market intends to drop, in which dimension will they allow you to place as many short positions as you want? Obviously, when we are working with the market, we do know that like there are certain things that come across as being good to such an extent that they are too good to be true, right? That's when we start seeing the market breaking above. The break above the specific areas results in traders doing what? Shifting perspective, right? So when traders shift perspective at this current area, the market drops in price. When the market drops in price, everyone jumps in, says, oh no, it just made an extension, and then they want to push price to the downside, but not understanding that the push to the downside or the drop in price, that's the filling station. Remember, guys, I hope I'm making sense, guys. Look at this. Do you know what's a steep? Okay, that's a stupid question. Everyone knows what's a steep hill. Okay, look at this thing, man. So do you know that like if a car is driving uphill, it uses more power than it does downhill? I want you. Am I making sense? When a car it's moving uphill, it uses more power than it does when it's moving downhill. So now we're not talking in terms of selling and buying, right? We're talking, this is an example, but now let's bring it back into trading. Now, when we bring it back into trading, we're talking about what? Breaking above an area of importance or an area of high significance, right? So when the market breaks above this area, it uses more power. When it breaks above a area of importance where traders view as being, you know what, this is, it can't break here, you understand? Once it breaks above that specific area, because it used so much power to break above that, take it in terms of the fact that like if a car has used that much amount of power to push, the fuel consumption has been high. So if the fuel consumption is high, the next filling station is required before we can continue on that specific journey. Therefore, if the market broke above a specific high,